form of bonds or pass-through certificates and the like. If I add that to the advances, we've seen a growth of 15% for the year and close to 20% annualized for this quarter. Capital adequacy again continuing to be pretty healthy. We are at 16.8% overall and 15.7% at tier 1 level at the bank standalone itself. Gross and net NPA again pretty much flat on a year-on-year basis as well as quarter-on-quarter. We end the period with a gross NPA of 2.49% and a net number of 1.2%. NIM for this period at 4.47%, again helped by the fact that the low-cost deposits have grown pretty much. Our total restructured standard advances at a very low number of 147 crores, which is roughly about 0.12% of our advances. And our SMA2 number for as of September has been 419 crores, which is again roughly about 0.33% of our advances. Cost to income, we talked last year about the fact that we intend to bring it down below the 50% mark. So for this quarter as well as for the half year, we are below the 50% mark. And the ROA at the bank standalone for the quarter at 1.68%. At the group level, this quarter has seen a profit post-tax of 1,202 crores, roughly about 28% rise from the same period last year. Apart from the bank, other contributors to the profit at the group level have been Kotak Prime, which brings in about 130 crores. The securities business has brought in 96 crores this quarter. 63 crores coming from the life insurance company and 53 crores from the other NBFC, which is Kotak Mahindra Investments. The international subsidiaries again contributing 31 crores this quarter. Advances at the group level at about 1,56,000 crores, again growth of about 14% on a year-on-year basis. Capital adequacy at the bank again, at the group level again pretty healthy at 17.3%. If I look at ROA at the overall consolidated level at 1.95% annualized basis. A total net worth now at about 35,600 crores and with a book value of about 194 crores. So we've also seen our assets which we manage on third parties which have grown significantly during the year across all sectors, whether it's mutual fund, alternate assets, portfolio management, offshore numbers and whatnot. We're today at about 1,20,000 crores of overall third party assets under management. So that's broadly been this quarter for us. Any other questions?
So could you take us through which segments have driven growth and if they've kind of met up, if your loans and deposits have met up to internal targets that you have?
If you look at the year, the areas which have grown, the corporate bank has grown pretty well. The other segment is within the consumer segment, the area which we call the small businesses, personal loans, credit cards, that has been a decent growth also. If you look at this particular quarter, the agri business has grown, the home loan LAP business again has taken a good growth. What has been a slightly slow growth for the year has been what we call the business banking group, which is just above the small business group. That has been a flattish growth for the period.
Restructured standard loans came in at 147 crore. Could you just take us through that? Have there been any fresh slippages this
No, nothing.
Not really.
So, how do you see consumer finance also demand shaping up? What is the outlook of the asset quality in this front?
No, consumer finance has been good. So, just to answer that other question in a different way, it's been about 1.5 years sort of post-merger now. And if you look at each and every metric which Jermin really mentioned about, it's really coming back to what we originally were as Kotak Bank really. So there is significant improvement in each and every metric and parameter. And what we are really finding is the businesses which merged earlier, so wholesale bank, you're seeing growth come back to the normal really level because wholesale bank really merged about a year back really. The consumer bank, the commercial bank really merged only about 2 or 3 months back really after the technology integration really happened. So those businesses are still taking some time to stabilize. I think over the next 3 to 6 months they will also stabilize. But in terms of delinquency On the consumer side, actually no issue at all really now.
Okay, so now that the integration with ING is over, how do you see the benefits in that sense flowing in specifically on your margins, which we've seen a bump up both?
So that's what I was saying. If you look at each and every parameter, really progressively, whether you see the CASA ratio, significant movement, you see return on assets, significant improvement, you see NIMs, we are back to practically what we were, in the past. Yeah, I think all of those metrics are really coming gradually back to the original pre-merger time metrics, really.
And going forward, where do you see the risks? We're seeing some recovery in metals and these sectors. Where do you think you could see slippages going forward? Any outlook?
No, at this point of time, I don't think you're really looking at slippages in any of these sectors. I think most of the slippages which had to happen have more or less happened. There are really no significant, additional movements which we're really seeing at this stage, really. Yeah, I think one is basically just waiting for growth to take on, really. Yeah, so it's not about really past slippages at this point of time, really.
And what range do you see your NIM staying in going into next year or the end of this year?
Well, this is a pretty healthy one, 4.47
I always
or
maintain the 4 to 4.5 range.
So
and I think
it should remain in thereabouts, really. Given the asset mix which we have and the fact that CASA has improved so very significantly, plus the sweep deposit, we're really getting a lot of benefit arising out of our liability base now.
So going forward, in that sense, what will your product mix actually most of the concentration come from? How do you see it shaping up the entire mix?
No, actually ours is very neatly spread across the three broad business segments, really. The corporate segment, the middle SME segment, and the consumer segments.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.